Welcome. We're going to tell you a story of gold in Arizona this afternoon. And thank you very much for the introduction, Eric. Please read your forward statement. GMV is laser focused on a single project in Arizona. We've got a highly experienced technical team and business team that can take this thing through exploring its full potential with the opportunity to become a mine very soon down the road. We've also enjoyed very good support over the past year from newsletter writers, including Eric Coffin, Brian Lundeen, and Scott Gibson, and Jay Taylor have also brought in their subscriber and contact bases, which has really helped broaden the story and allowed us to get financed and move forward. GMV's project is in southeast Arizona in a very sparsely populated place. We've already got an inferred resource of 500,000 ounces of gold, and our target is to get that up to 1 million ounces. The project area spans about 2,300 acres, or about 10 square kilometers. And in the existing resource is just one small corner of the property. We've acquired areas where there's historical exploration and surface workings over the last century, where they've really just scratched the surface. So we know there's tremendous opportunity to expand beyond the existing resource. I think from an investment point of view, it's critical to know that this is a very tight share structure, and we'll explore that a minute more shortly. Just one look at the picture there. You see the rock type is limonite and hematite, basically a red color. And what the geologist will tell you, if it's red, it runs. And there's a lot of red on the property. The gold is associated with the red color. Looking at the share structure, we've got about 31 million shares outstanding, 40 million fully diluted. One thing to note is we've got a chart that looks like a lot of other gold companies over the last year. What happened in May this year is we got the newsletter writers aware of the story and bringing it out to their subscriber base, and we could see the stock sort of going from the 12-cent up to the 70-cent range. This allowed us to do a couple of financings, bring in about $4 million into the treasury. We've now got about $3.7 million in the treasury, which is more than enough for the next year's program. Like many others over the last couple of months, we've settled back. We're now in the mid 40-cent range. So we think for many reasons this is a compelling opportunity to get into the stock. Arizona itself is one of the premier mining destinations for investment capital in the world. I would say with Nevada and a few provinces and territories in Canada, this is the place that mining counts both for jobs and the impact on the environment, the economic environment. Also, it would be a low environmental impact in this part of the state. The mining companies themselves generate about a $4.3 billion impact, and our particular corner of the state, there's very little other economic activity. There's some small-scale farming with some pepper farms. There's a vineyard about 10 miles away. There's no other industrial base in that part of the state, and they would welcome our participation and creation of jobs. The local rancher is on board, and we've got him supporting the project. Looking a bit at the resource itself, we think this resource is open in all directions. We are starting a drill program this week, which will explore that further, stepping out along strike to the southeast. The other element to this story, it's really the two elements. It's an exploration story to build ounces. It's an engineering story to build the pipeline down to the development milestone towards us being a mine. We've had metallurgical testing done on bottle roll testing and bench scale column testing, demonstrating recoveries of 88 to 96%. We've currently got about 3.5 months into a column leach test on run-of-mine ore, and this is about halfway through the program. We expect to be reporting on that probably in the first quarter of next year. If we can demonstrate again run-of-mine ore, that will significantly improve the economics of an open pit heap leach type of operation. The resource that we've got to date is based on 180 drill holes. About 85% of that came from placer domes drilling around 1991. There's been some other companies' drill results we've incorporated in there too, like Oracle. Some of the company drilling, which is land we acquired after the resource was calculated, was from Santa Fe. And that drill holes demonstrated grade and structure similar to what we've got in our existing resource. And the new drilling program, which is starting this week, which is about 500-meter step out from the existing resource, will go over the Santa Fe holes. So we think there's a tremendous opportunity to upsize the resource as a basis of, on the basis of this drilling. And we would expect to have an update on the 43-101 resource calculation early in the new year. As I've said, we've tripled the land position, covering ground which was previously small-scale operators but no historical records. We know, again, from the line, if it's red, it runs. There's a lot of red over our property, 2 to 3 kilometers to the south. The hematite exposed at surface in many areas. So we think there's tremendous exploration potential even within the existing land package that we've got now. The grades we've got, about 0.7 grams per ton at a 0.2 cutoff, is at the low end, but because of the expected favorable metallurgy, low stripping ratio of 1.5 to 1 projected, and scalability of this project, we think that the grade is only one small element of making a very economically successful mine. Just a little bit on the geology. The key takeaway here, this is an oxide ore body to any depth that we've drilled so far. We've gone down about 200 meters, and the future drilling program, this week's drilling program, is going to have holes going down to 300 meters, so at least 100 meters below the existing resource level. The rock is highly fractured, and this has allowed the gold to come up. It's also apparently very easily liberated in the heap leaching type process. So we think the nature has been very kind here, and the engineering elements will work for us. So next steps in the program, the heap leach column test is ongoing. We expect results coming over the next quarter or so. We've just completed a 700 sample geochemical program over about 2 square kilometers east of the existing resource, contiguous with the existing resource. This combined with the audio frequency magnetotellurics geophysics program will look down 300 to 600 meters below surface, and this is deeper than we've been able to look before, to try and interpret structures and generate future drill targets over a much wider area than the previous resource. So we think there's tremendous upside potential on the exploration as well as the development and engineering. We plan to start the environmental assessment work early in the new year and to conduct a preliminary economic assessment by the middle of next year, leading by the end of the year to filing a mine plan of operations. And we expect this will be on a much larger resource base. A little bit about the people running the company. Ian Klassen founded the company about 8 years ago, and he's got a lot of background in exploration in the Americas. Michel Pilon, the CFO, is also started at the same time the company was formed. The key technical person associated with the project is Dr. Dave Webb. He's the independent geologist qualified person that drafted the 43-101 report, and he's guiding our field programs. He's on site, even as we speak, getting the geophysics and drilling programs organized. He's a structural geologist by training, and my background is an engineer, MBA. I spent the last 40 years somehow associated with mining, either in project finance or company exploration management and engineering. We've also got a very strong board of directors with 2 American and 2 Canadian directors, which will help us not just with the compliance on the regulatory side, but getting through the regulatory framework of developing and permitting a mine in the U.S. And our advisory board in the U.S. includes 2 very strong individuals. Dr. Newell was an ex-Newmont employee executive who was involved with the early stages of the Carlin Trend development. And Fred Brost is based in Arizona, has a couple of projects permitted in his background, so he'll help us very much with the permitting process going forward. So in conclusion, the Mexican Hat and the GMV Minerals story is one of a low market capitalization company with a very tight share float. We've got a 100% interest in the Mexican Hat gold project in southeastern Arizona. We've got over 500,000 ounces in resource now with a plan to take that to 1 million ounces. The discovery is open possibilities in all directions, including at depth. We are following a dual path of exploration and development de-risking, following the metallurgical successes we've had to date, to continue with the larger scale test, confirming that there will be a low strip ratio, 1.5 to 1 in the model is expected. This will be a low-cost heap leach model, and again, permitting in Arizona is expected not to be a problem with this model because there are other heap leach operations operating in the state. The regulatory approvals are underway, and we expect to do environmental assessment in the new year. Okay, based on all of this, why would this be a compelling entry point for you to look at getting into the GMV stock if you're not already a shareholder? We do think that this company is the sort of project that will have a target on its back from the majors. There's very few companies like this with a scalable resource, with favorable engineering, in a politically secure zone, and a permittable state. So absolutely, we think this is a target. But we're not focused on that. We're focused on de-risking and building up the resource. We've got the $3.7 million cash in the bank, which is more than enough to cover our next year's program. We've got further upside from hitting our development milestones on the engineering front over the next year. We've currently got a market cap of about 13.5 million Canadian, which on the 500,000 ounces relates to about Canadian $25 per ounce in the ground, or US $19 ounce in the ground. So in summary, I'd like to thank Eric and Jay and Scott and Brian and everyone that's got our story out this year. If you have any questions on the company or our drill plans, want to come by the booth, I can show you in detail what we're planning to do there. And look forward to speaking with you again soon. Thank you.